Hey everybody, good afternoon. Welcome to 12-Minute Trading Live. Today is Monday, the 8th of January, and I'm joined by Dave Lukas. My name is Doc Severson, and we're going to be talking about the markets for about the next half hour here and what we're seeing. And boy, Dave, we're seeing a hell of a move today. We're up 55 handles on the S&P, where we had an expected move of 17.7 points today. Like,
So
surprise!
over 3x.
Yeah, it looks like NVIDIA's really been driving things, and then everybody else kind of went along for the ride as well, too.
Yeah. We talked about this last week. I think if anybody attended a session last week, we talked about how the selling that we were seeing wasn't yet. I mean, we have an exhausted weekly chart. You'll bring that up and talk about that, and how this daily chart was charging back up, and how we thought that there was going to come a point where that daily chart may start to release, and we may get a run back higher to like test those, those highs, test those last highs we're at, and to let the SPX finally hit that all-time high or eclipse it. And then we thought we would be seeing that sell-off from there. And we talked about, don't be surprised to see a pretty big rally come out of nowhere in the next week or two that'll ultimately not quite make it, be a lower high, and then roll over from there. We still could eclipse the previous highs, maybe, or hit at least on the SPX. I think that's the only chart that didn't hit a new high. I guess the Russell didn't either, but I don't think the Russell will. But the NASDAQ, the Dow, all those guys hit big time new highs, and I would this is just, to me, a little bit of a relief rally that has caught some people off guard that were positioned short. So it's got exacerbated today. So we're running it out. We'll see how the day ends, though. Sometimes days like this, you can just see it sell right off back into close. But as of now, I think we're looking at that kind of rally for potentially the lower high, and then some news, something, anything, just to be an excuse to bring ourselves down. And I think our targets, my targets on the S&P are 4,600 or an undercut, and then on the NASDAQ or the NDX 16,000 or an undercut. Russell 1,900, maybe an undercut there, and the Dow probably a couple thousand points, right? That's kind of what you're looking at, for a corrective move end of January into early February.
Yeah, we have plenty of catalysts into the end of this week to push markets around if they want to do. We have the evil PPI CPI twins coming up Thursday and Friday, and then there's a smattering of Fed speak, which the Fed is a little bit back on their heels, because I think they got really surprised by how violent the market rallied once they sort of Powell in his December. I think it was his December meeting was when he where he sort of said, we could maybe see ourselves, relaxing rates next year, which I didn't think he would ever do that. Right? That is like, that's their genie in the bottle that they're trying to hold on to with everything, and for him to actually go to that step. And now they're trying to walk it back. They're doing the backstroke,
who was it that was speaking today said maybe 2 rate cuts this year. I think somebody said, whoever was speaking today. The voting members this year are more of the hawkish members of the board, although what hawkish is today compared to like what hawkish was 10, 15 years ago is a big difference, right? So I think I think they do cut. I just don't think the market's going to get 6 rate cuts. At some point, that's going to get repriced in. But I think the catalyst for any sell-off and stuff, I think it's going to come from earnings. I think there's going to be some earnings coming out, or some guidance that comes out that just, tells the market that things are not going to be as good. Because remember, in the end, we talk about all this stuff. We talk about the Fed. We talk about these things, and they impact the market. But really, the underlying of the entire market is earnings. And market's a forward-looking instrument. It's looking at earnings to the future, and it's pricing based on that. If it thinks it's going to get rate cuts, of course it's going to price in, better things for the future, because that means things are not costing companies as much, which means their bottom lines, their revenue can be better, right? Which in the end relates to better earnings, right? So the underpinning of it all is still earnings. It used to be more so than it probably is today, but still I think that has some of the biggest sway, and that's what people are trading off into the future. And as of now, that looks pretty good. So if there are some earnings surprises or guidance surprises, or things look like they are maybe starting to slow down, right? And we've been kind of seeing that. Companies have they've made up for it a lot, but they're kind of like out of bullets, right? So now the rubber is going to start to meet the road with these earnings reports. So it should be an interesting earnings season.
We had the same thing happening back in 2015, 2016. We actually did have an earnings recession back then, which few people really talked about, where earnings really started taking a nosedive. But what happened, instead of the market correcting vertically and going straight down, like the typical 20+% for a bear market, it actually went horizontal. So basically what we did was we went sideways for about a year and a half, good year and a half, 2015, 2016. And then
I actually could see that.
Yeah, right after the election is when things obviously, took off, and when the market got some certainty. The market got certainty well in front of the retail investor in that period of time.
I sent the thing out to my students this weekend because Bank of America put out effectively their how they expect the stock market to go for the year. And effectively, their through May is flat. Like the market is going to be range bound through May of this year. June, July, as usual, we see there's going to be a rally in those months. Softness in August and October. And then after the election, because the market loves certainty, right? It'll be certain and it'll trade off that. Then you've got the biggest rally into the end of the year. I mean, it's amazing how that consistency of the seasonality of the market follows each year. So I think right now, through that May timeframe, I think we'll see like we saw last year. Remember last year when we were just like, we couldn't lose like on iron condors or anything through May. You're just selling them left and right, and just the market was going nowhere. We had that span of like 6 weeks, I think, in April into May. We're just sitting there going, this is not normal. Things are going nowhere. And it charged up that weekly chart, similar like we're at now. We got an exhausted weekly chart, charged that weekly chart up. And then we ran like crazy through, the summer, right? And we were like, we don't know which way this is going to go, but we know a big move's coming. We got it, right? And it ran like crazy in the summer. We got that softness into September, and then October of this last year is when we bottomed out. And then right as we got into November, whoosh, I can see the exact same type of pattern happening this year.
Yep.
So, and it's amazing how many years actually end up like that for all the noise and stuff and everything, So
I'm going to do a quick
probably good segue to the charts. Yeah,
a quick charting thing over here. So we're going to look at the S&P 500. We're going to look at this from a monthly, weekly, and a daily basis. From here, I am going to bring up, I forget this every single time, but I'm going to bring up my my magic pen here so we can I can draw on this. But what Dave was talking about earlier is over here. This is where we have, a great deal of energy. So this represents like potential energy, like pulling something up to the top of a hill. You let it go. It's got kinetic energy. So all of this has been non-linear price action. This is just the market winding up like a big spring. And the thing here is that it can go higher, it can go lower. It doesn't care. It doesn't care. It just wants to do something. When it reaches this level of energy, look at this example here. This is a perfect example where it went sideways for 2 weeks, and it said, hey, I got to go somewhere. I need to go somewhere. And it decided to rip to the upside. Now, what's balancing this out is the same thing over here. We have exhaustion. So this is a 5 times larger time frame, the weekly chart. Over here, this is a parent time frame, so this carries more weight. And so if the market decides to go higher, I think the upside is very limited here. And so this is why I'm saying that we have the potential for a bull trap. We're not calling that. We're not saying, definitively we're going to have a bull trap, but the odds of a bull trap are increased for something like this. So if we have some kind of bad data print on CPI, PPI this week, this could set up a lower high, catch a lot of people leaning long. This is what bull traps do. And this is where we get our target down here around 4,600 that Dave was talking about. If we do see a breakout above here, I think it's going to be very, very limited. So any break above 4,800 into new highs for the year, I think will be very, very limited until the weekly chart gets a chance to catch back up again. And so,
well, kind of a telltale sign on this too. If you kind of just zoom in a little bit on the daily chart there, and you look at that energy line. Like today is really interesting. We got a 50-point up day, and we had basically coming in, we had fully charged energy for the most part. And if you look at what that energy is doing, it's not releasing out. So, like if this was the start of a nice run higher, typically you would see that energy releasing lower while that you got that big green candle there going up. All this is doing is recharging itself.
Yeah,
because you can see the last four candles, it's sideways action.
It's canceling out all of the linearity of last week. That's all it's doing.
Right.
And it's doing
and so we were leaning, if you can see, we had started to lean into that downward move with the energy. And if we had, started to sell more today, I think that energy would have gone with it and it would have kept going lower. So we haven't released yet. We don't know the direction yet. I think that's a really key thing right now, because this is probably going to plod along until CPI, PPI and the first bank earnings and stuff this week. And then as we get into next week, start to make its run. So I think it's one of those things that just be careful out there and let this thing release and start to tell you which way it's going to go. Because it'll be a short-term freight train that you don't want to step in front of.
15. This is actually 16 days, maybe 17 if you count this one over here. 17 days in the same range. So this is really actually a weekly consolidation that we're seeing.
Mm-hmm.
So it's just the very beginning of a weekly consolidation. Now, what we talked about last Tuesday when we got together, I said, hey, if this stays in a 100-point range up here, this is very, very bullish. And that's what we're seeing. So that is by itself is bullish. Now, the only thing that could change that is, like we said, some kind of surprise coming into the market, setting up a lower high. So this is where we get, stocks take the stairs up and the window down. If we get a bad print on CPI or PPI, especially Thursday's CPI, then this is the big, I'd say, liability for the market right now. Is a lot of people are going to be leaning long after today because they're saying, hey, look at tech. Tech is running again. And really, it's mostly been, I think most of the move has been this dude here. NVIDIA is breaking out into all-time new highs. And a lot of people, this is an ascending triangle pattern here. You can see that equal highs and the lows keep getting higher along the way. And then typically what you're looking at with this is the measured move target is the open end of the triangle. So that's about 125 points to the upside. So that is showing a potential measured move target of 625 on NVIDIA. That is,
and that's the analyst. I think that's the analyst call, right? Isn't that the where most people have their target around 600 on it?
I don't know. That's just my measure move target based on the chart pattern. So, but
when's earnings?
When's
earnings for NVIDIA?
NVIDIA is always late in the cycle.
Yeah,
it's very, very late.
When was the last
cycle.
Earnings there?
It is let's see, 11:20 or so thereabouts. So that
so we've got it's going to be February.
Let's see, 1, 2, 3. Yeah,
or
late February. Yeah, it's going to be.
Yeah.
So most tech stocks are coming up at the end of January, which is going to be right around the Fed meeting.
Mm-hmm.
And NVIDIA is going to be a month later after everybody else. So it really is the one that brings up the tail of tech. But we're getting just about everything else moving. Now, everybody came into today bearish because of the Boeing incident. But look at this. Boeing has bounced off the 50-day moving average. Looking at, people are buying the dip there on Boeing. So
yep,
market continues to go higher. So, hey, is there... while we're here today, we got a bunch of folks live. If there's any questions you guys want us to address while we're still here for another few minutes, please let us know, and we'll get right on that. Otherwise, for those of you that are checking in on a replay, so you're watching this sometime later in the week, let us know if there's anything that we can answer for next week's session. So next week will be on a Tuesday again. So Dave and I will have to get together and figure out a time next Tuesday to do this.
Yeah.
But yeah, Monday's Martin Luther King Day, so that is a
Yep.
market holiday.
Free day of time burn.
Free day time burn, absolutely. So
While we're waiting for any questions, tomorrow I'm part of an event with Timing Research. It's kind of cool. They've got 16 of us traders that are just taking our how we set our setups, our chart setups, and how we analyze stocks, and they're just throwing us to the wolves with a giant crowd that are gonna pummel us with stocks to analyze and all that stuff too. So if you're interested in seeing that, there's some great traders on there, all kinds of different charting setups to kind of evaluate, look at. In fact, I think if you can't attend, you can still sign up and get the replays of it. So, Doc, I think you have that link. You can drop it in there. But I think it's something cool. If it's a little different. Usually these things are like presentations and all that stuff and everything. But it's one of these things where we're just gonna jump in on these different stocks and indices and just analyze them and give our best thoughts on where they're gonna go. So,
so guys,
there's the link.
Just look for the link, which is on the video description of today's live session. And there you go. So make sure you sign up so you can be part of Dave's event. And then is it worth talking about the event that we're going to do at the end of the month?
Let's talk about that next week because I'm still putting some things together for it. But we're going to do our annual year in the review event where we kind of go through all the lessons learned in last year, and the changes to our strategies for this year. Usually, we've got I know we've got some new surprises for you guys, some new things that we're doing going into this year. Courses, things like that we're going to talk about. So it's always a great event, always well attended, and so it'll be towards the end of this month. But we'll have more details coming out about that next week and everything. So. Yep. Chalupa Man. Hey,
Chalupa
no
Man's
problem,
checking in. Now I'm hungry.
So.
Okay, let's.
But yeah, I think we're in one of those scenarios where we just got to let this daily chart show its hand and tell us which way it's going to go. I just think that's where we're gonna be this week, and it's going to happen probably Thursday, Friday. So, yeah. Is there anything else you're seeing out there that's worth noting?
Well, here's just the intraday chart. So here's the way the intraday chart started out. And the market internals there was nothing really special about the market internals either. We really didn't see anything to give us an idea that this is going to be this big day. Actually, we did start off early on today. We were underwater, so the futures were actually negative.
Mm-hmm.
And then they went barely positive around the cash session. And then this is where things really just sort of took off. It was kind of a positive grind and then straight up. And this is basically a great example of short covering that you can tell just by the slope of this. This is where people are panicking and buying back their positions because it was so trendy to be short last week and people were excited about it. So yeah, this is a strong trend. The other thing to look at here, and sometimes the market, every time the market is trying to tell you a story. So notice what's happening on the pullbacks. Notice what's happening on the pullbacks. The pullback that we've had since the beginning of the year has actually been very gentle. It's been very gentle, we haven't seen really any implied volatility spikes. If we look at the VIX,
nope.
The VIX has been very, very quiet. Look at this. So we 2% move on the S&P, and we've barely gotten any kind of move whatsoever on implied volatility. So that's the market saying, hey, I'm just a buyer, and this is just a buyer strike. But we've seen markets like this before where the pullbacks are quieter than the rallies. The rallies are stronger than the pullbacks. And last time I saw one of these was we saw this back in, if you look at 2017 was like this, the pullbacks are quiet, the breakouts were violent. We saw this back in 2013. The pullbacks were quiet, the breakouts were violent. So we're expecting this, irrespective of, again, we don't trade based on what the news is out there. The news is generally awful. And, social media is a dumpster fire for everybody's opinions out there. But we don't make money based on that. We don't trade based on, people's opinions. We really do look at the price and say, Mr. Market, you tell me which way to go. And so we're just trading along with the trend right now. And so the market's always trying to tell you some tips and tricks and how it feels about things. It's not going to tell you what's in the future. But just this character here about how strong this is breaking out. Now, this could all change as of Thursday. Hot CPI print, and we're setting a lower high. And we probably would spend the rest of the month trying to figure out where support would be. But as Dave and I think, support at the worst here is going to be maybe 4,600. But we'll see. We will see. So I'm going to take a quick look over here.
It's going to take a lot to just take it that far. I just think there's too many people that want to come in and buy there. I mean, we've still got some big old gaps, but I think those are going to have to wait till the next bear market to get, I think, filled. I just think there's too much support around that area. Maybe a small undercut, but you make a good point about the VIX and also this weekly energy. Don't discount it. There will come a point, the longer it goes, like a game of musical chairs, the longer it goes, the more violent that correction will be at some point. And the VIX, you'll get that big spike in the VIX up in the 20s again. So just beware that that's lurking.
So another thing here, guys, is the Russell. The Russell, after being just an absolute dumpster fire for the past 2 years, was leading in the month of December. It was leading all indices higher. And it also pulled back a little stronger over the past week. So watch this carefully. If this is going to go into ABC corrective, which would be like this, the first one to do so is probably going to be the Russell. So watch this carefully, even if you don't trade it, because oftentimes the Russell can be sort of an early indication of where things are going to go. You know, we call it the canary in the coal mine. So watch that one carefully. The Dow was actually leading for a while as it made new highs, but this one's going to be...
The Dow is the most exhausted of all the charts.
Yeah, the Dow I think is going to walk sideways for quite some time. And that's the way the Dow...
Boeing's put the damper on it, at least to start the day, but it's up now, I think, right?
Well, Boeing is up off the highs, but it's still quite a gap to fill. So... But that's hard to look at this and say that I'm bearish looking at the chart. I mean, this is an inverted head and shoulders on the weekly chart, which is breaking out to the upside. Yep. And there's it's still nowhere near the potential for this thing. And, you know, not very much of a pullback at all. I mean, look at this on a fib perspective. This is nothing. So this is typically what happens is, you know, the first red candle that we see, everybody panics. But look at this energy and look at the energy here. This dichotomy between the weekly chart and the daily chart, this is what we're talking about. And this leads us to believe that on the first sign of any kind of inflation returning, anything like that, that is going to be something else that you guys can watch out for as well too, is to watch the 10-year note or interest rates at all. So right now we have a rejection at the 200-day moving average, which is reasonable. All right. If that starts to go above there, watch out for that. Also watch the dollar. The dollar should be heading lower today, and it is. It is. Okay. But watch, you know, look at this rally in the dollar. That was the entire time that equities were having a difficult time rallying. Mm-hmm. And notice what's happened since that point. Equities have gone ballistic since that point. So right now, the stock market is inversely correlated to the dollar index. So just keep that in mind. So I'm going to jump back to us here. Or at least there we go. Okay. So if there's any other questions, let us know. Or Dave, do you have any final thoughts for today?
No, I think you made some great points on that inverse on the dollar and stuff. In fact, you know, it's a good time to maybe look to sell into those moves lower because they tend to revert to the mean. I think the dollar and the 10-year are absolute keys. So, and CPI will move them either way this coming week. So I don't know that every CPI print that we have seemed to have has come in line for the last 3 or 4. I think that continues for now, but I think maybe as we get into February and March is when maybe things change there. So we could again just kind of go sideways for the first quarter and not have any massive correction. That is absolutely possible, and that's one way, like you said, staying high and tight on that weekly chart. Just put train tracks at that high level, and if we see that happening, guys, that is a clear sign things are going to break higher out of there.
Right.
You just typically don't break lower.
Yeah, and don't buy into the gaslighting that's out there. That's out there in the narrative. Like if we hit 2% inflation on the CPI, don't forget the embedded inflation is still out there and is not going to go away anytime soon. So if you're wondering why your bills are still really high from the grocery store, it's the embedded inflation, which is not going to go away just because we're back to a 2% print on the CPI.
Yeah, you're still paying 20% more than you did a couple of years ago.
Oh, big time. Yeah.
And now it just gets to build on top of that. So
right. So don't buy the gaslighting that's out there from anybody in office. So with that, I think we have exhausted our ability to analyze this market for today. So I want to thank everybody for joining us today. And again, make sure you catch Dave tomorrow at the link, which is under the description below. And then we will be back here next Tuesday. So next Tuesday afternoon at some point, we'll let you know when that is. And we're looking forward to chatting with you guys at that time. All right. Thanks, everybody.
Awesome. Bye, guys.
Have a great Monday. Bye now.